Index heavyweights eke out some gains, but mid-caps feel the pressure with declines far outnumbering advances. Utilities, FMCG and IT notched some gains, while healthcare and energy drag. Dr. Reddy's misses expectations on profitability as a US sales dip on lower Revlimid sales and on rising competition in key drugs. But India sales perk up driven by the Sanofi vaccine deal. JSW Group's Parth Jindal tells CNBC-TV18 that they are keen on buying AkzoNobel's India's paint business and have put in a bid. He also refutes claims of a cement cartel, saying prices have been reined in to aid consolidation. There seems no respite for lenders offering small-ticket loans, with Spanna Surti seeing a shocking surge in bad loans. Surya, Small Finance Bank, sharply trimming its growth and asset quality guidance, and Ujjivan Small Finance Bank too seeing the pressure in numbers. Hello, good afternoon. You've tuned into CNBC-TV18 and you're watching Business Lunch with me, Vinny Motiwala. A quick look at what the market is doing as of now in terms of Nifty, off the day's highest point as well as what we're seeing, 23,230 around that mark. Okay, 23,200 is what the Nifty is just holding on to. So clearly off the day's high is what we're seeing the Nifty at. Almost just near that flat line, and we could see it slip in the red is what the benchmark indices are doing as of now. Let's watch out for what happens actually in the second half of the trading session. Let's pull out the mid and small cap, because seems like, there was some bit of an underperformance that clearly came in from the mid and small cap. So Nifty mid cap and small cap, we've seen them trading in the red today. Nifty mid cap is down 0.6% in trade. Nifty small cap is also down 1.4% in trade as well. So pressure is coming in on the Nifty mid as well as the Nifty small cap. Now looking at the advanced decline ratio today, we're seeing that clear favors coming in terms for declines versus the advances. So yes, lower number of advances today in the market versus the declines that we're seeing are much higher in terms of trade. And you can see the chart on the screen. Top sectoral gainers today, we have IT as well as FMCG, which managing to hold on to gains today. Decent gains coming in, and IT, a lot of mid-cap IT companies have reported the numbers. So on the back of that, we're seeing some bit of a momentum that is building in for these IT companies as well. Nifty IT holding on to gains of 0.8%, FMCG holding on to gains of 0.6%. Among the top losers, we do have Nifty Media, that is down and out in trade. So that is among the top losers. And other than that, we have Nifty Pharma. Now, do not forget, we had Dr. Reddy's that reported their numbers. So let's start the show by talking about Dr. Reddy's that has slumped in trade today. We're seeing Dr. Reddy's that is down as much as 5% in trade as of now that we can see. Now, in terms of numbers, revenue surely came in line, but there was a miss that came in on the profits front. And overall, what is impacting the earnings of the company is the US sales. US sales were down by 10% on a quarter-on-quarter basis. That was mainly due to the Revlimid sales being lower is what we are anticipating. And the patent for Revlimid, that's the generic Revlimid, is going to expire in 2026, right? So this impact is likely to have, is likely to continue for Dr. Reddy's even going forward. India business, they managed to see a 14% growth. Some chronic side of the therapies are seeing some bit of a pressure, so keep an eye on that. Management has spoken about maintaining their margins at 25%. They said that they want to focus on the key core areas, consumer care, biologics, and as well as innovation, and spoken about the GLP-1 opportunity for the company going forward in 2026 and onwards is when we'll see this opportunity playing out for the company. Now, most of the brokerages have maintained their rating. They're not too enthused by Dr. Reddy's numbers. So they are maintaining their rating, and HSBC maintaining the target price at 1,250 rupees per share. Citi also holding on to the target price of 1,100 rupees per share. And similarly, we have CLLC also maintaining the target price at 1,120 rupees per share. But let's also listen in to what the management of the company had to say. We had spoken to Mr. Israeli, who's the CEO of the company, and specifically in terms of their Q3 performance. Listen in.
These specific products do have competition. There is no change to the competitive landscape of these specific products in the last quarter. But normally when product is big, other products other companies are joining. This is the nature of the game, especially in generics in the United States. And we face competition in these two products as well as actually in every other products, then this is likely to continue, but it's nothing out of ordinary. Before the competition entered to these specific products, which was around 6 to 9 months ago, at that point of time, indeed, we lost some market share to the new entrant on this product. This is correct. Overall, it's a normal behavior that is happening in every product. So 2026 is the year in which the market will start to be opened up in terms of IP, in terms of patents. The main countries in 2026 will be Canada, India, Brazil, and 80 more countries that are relatively smaller, in which, as we speak, there is actually no patents, and these markets are open. We are planning to launch the product in many, many countries.
Okay, let's move on. Parth Jindal, who's the MD of JSW Cement, a relatively new entrant in the sector, wants to become a pan-India player. Now, in an exclusive interaction with Shireen Bhan in Davos, Parth Jindal signaled about his plans to acquire AkzoNobel's India assets and says that he is expecting a fierce battle coming in on that front. Listen in.
If you want to remain relevant in cement, you got to have at least a 10% market share. Otherwise, there's going to be a threat of consolidation even on your company. Very small. We would be about 3.5% on a pan-India level. So if Indian cement demand, we would be about 3.5%, and our ambition is to get to 10%, and that's going to be happening over the next few years. With JSW first and then Birla's entering, I think the industry has definitely heated up, and it's led to the first bout of consolidation with AkzoNobel putting its India assets on the block. My true belief is that the paint industry is not a winner-take-all market. It's not a capacity-driven market. You can't just build plants and expect the consumer to choose your paint. I think there's a lot of brand equity that has been created over the years by the incumbents, and this is an industry where you need to win the micro battles. You need to win over the influencers, whether it's the contractors, the painters, the interior designers, the architects, and finally the end consumer needs to select your paint. So it's been an interesting journey. It's completely B2C, and it's the first time JSW Group had gone into B2C. Now with automobiles, that's the second one. But it's exciting, and I think the AkzoNobel opportunity is a really exciting one.
Now, moving on to the big policymaker from Davos, Maharashtra Chief Minister Devendra Fadnavis said that the state has signed more than 60 MOUs worth $200 billion. These include tie-ups with global giants like Amazon and Microsoft. Now, speaking to Shireen Bhan, Fadnavis admitted that the state's balance sheet is a little stressed right now, and he promised fiscal consolidation without impacting the growth and capital expenditure. Listen in.
So what has the Maha pitch resulted in terms of MOUs? The last count I had was about 50 plus. Where are you now?
Yeah. So it's 60 plus and around $200 billion. Okay. So it's huge investment that is coming, and it is coming in diverse sectors. We could actually we had MOUs with giants like Amazon, Microsoft into data centers. We had a lot of MOUs into manufacturing. We had a lot of MOUs into new technologies. We have a lot of MOUs into manufacturing. Manufacturing is, of course, our own forte.
Yes.
So a lot of MOUs have gone into manufacturing. Our balance sheet is little stressed than how it used to be because of certain our schemes. But having said that, I must tell you that we are still below 3%. So we'll present our budget next month, and in the budget you will see the figures that we were able to maintain our deficit less than 3%. But I think our main main thing which we want to do is that although we don't want to close our schemes, we want to make them more vibrant, make them more popular. But at the same time, we don't want to lower down on our ability to deploy capital investment.
Okay, on that note, we're going to slip into a very short break. On the other side, we'll listen into Donald Trump's comments coming in from Davos. Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Now, US President Donald Trump addressed the global business and political leaders at the World Economic Forum in Davos. In his first major speech on the international stage since taking office, he said that the US will be the crypto capital of the world. Interestingly, hours later, he signed an executive order banning CNBCs and as well as CBDCs, I beg your pardon, CBDCs, as well as created a committee of new crypto rules that were formed by him. He also said that he will ask the OPEC to reduce oil prices and voiced his willingness to have better relations with China.
The United States has the largest amount of oil and gas of any country on earth, and we're going to use it. Not only will this reduce the cost of virtually all goods and services, it'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto. My administration has also begun the largest deregulation campaign in history, far exceeding even the record-setting efforts of my last term. Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent for what's taking place. Millions of lives are being lost. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us. All over, the progress that you're seeing is happening because of our historic victory in a recent presidential election.
Now, even as Donald Trump makes a pitch for interest rates to be lowered, BlackRock CEO Larry Fink, I beg your pardon, and Morgan Stanley's Ted Pick talk about the Fed's rate trajectory and the impact on the investments and the U.S. economy. Listen in.
I think it would start a conversation that we need in our country, and that is, how are we going to bring down our deficits? The positive side of what the Trump administration is doing, they are trying to find growth from the private sector. Right. So depending on how that all plays out and how quickly the private sector can effectively put capital in the ground and start building, that's one side. At the other side of it, there are some very large inflationary pressures that we all have to be aware of. And depending on how this plays out, there is a scenario where we're going to have much more elevated interest rates because of inflation. And that's going to have a very negative impact on the equity market. It's going to change, it's going to force a revaluation. But it will probably create a real conversation. What are we going to do about the deficits?
I think the two themes now are kind of the end of financial repression I've talked a little about, which is sort of zero interest rate, zero inflation. That's behind us. And whether we're going to have one or two moves by the Fed this year or none at all, we kind of know where we are in the bond market, somewhere around 4.5. In the broader context of the post-pandemic period where we're trying to figure out what rates would generally be when we had a roof off the back of the inflation burst, we know for this moment, for the next period of time, we're somewhere in the fours on a risk-free basis. And as you know, if you're an analyzer looking at a portfolio company, you're a private equity sponsor that's sitting on 2,000 companies. As you know, they're out there each worth $1 billion or more. They want to move them. So what's been one of the arguments not to move them? The argument has been the uncertainty around rates. So I'm not saying there isn't rate uncertainty at all. I'm saying we're kind of have that in a box.
Okay, quickly let's take a look at the numbers for granules area. They were just reported a short while ago. When we're seeing in terms of revenues of the company, that's seeing a decline of almost 1%. EBITDA and the profits of the company are also seeing a decline in the range of 6 to 7% as well. And margins have contracted by to 19.9% versus 21.8%. So around a 200 basis point contraction in terms of margins. On the Gagillapur facility update, obviously, there was a voluntary pause that has come in. And, that update had come in during this quarter. But this is surely something that is impacting the overall revenue as well as the profitability of the company. That's the highlight also coming in from the company in terms of the notes. So, yes, look at the profits of the company down 6.4% as well. Revenue is also down. And in terms of overall, with the estimates also of the street or analyst estimate, BBG estimates that we were comparing it with, seems to be a bit muted on that front as well. So yes, surely keeping an eye out on Granules India. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. On the other side, we'll look into the comments coming in from Oil and Petroleum Minister Hardeep Singh Puri on the impact of Russian sanctions as well as on the Indian oil imports. Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's move on. Oil Minister Hardeep Singh Puri said that he is not concerned about oil sanctions on Russia, as India is a big buyer and there are enough countries that will sell to India. Listen in.
I'm not too concerned about this. And I don't want to address the question of any particular sanction. This is a action by one government. They are also simultaneously trying to bring the conflict to resolution. Right. And by bringing the conflict to resolution, it means that this conflict started in February 2022. And even, let's say, I'm hoping that by March or so it will, I saw President Trump's message that, he likes the Russian people, he's a friend of President Putin, and he wants to bring this pointless or senseless war to a conclusion. That's a popular sentiment. What we are confident about is the fact that there are very few countries in the world which are such large-scale buyers as India is. When I joined the Petroleum and Natural Gas Ministry about 3.5 years ago, our daily consumption was 5 million barrels. Now it is 5.5 million barrels. So the limited point I'm making here is that you can be comfortable in the sense that because you're a large buyer, there are a lot of people who want to sell to you. Right. And also, since February 22, sometimes one supplier is higher, sometimes the other. So there's no cause for concern at all.
And several people are feared dead after a massive blast at an ordnance factory in Bhandara district in Maharashtra that took place. The blast occurred at around 10:30 a.m. according to the government officials, and rescue efforts are currently underway while firefighters are engaged in containing the situation currently. And moving on to the preparations for the 76th Republic Day, Indonesian President has arrived in New Delhi. This is his first state visit to India since taking office last year. He will be the chief guest for India's Republic Day celebrations on January 26th. Meanwhile, the full dress rehearsal for the Republic Day were held at the Kartavya Path in New Delhi last evening. And some updates coming in from the world of sports now. Thousands of fans jeered Novak Djokovic as the tennis great was forced to retire midway through his semi-final clash in the Australian Open. Now, Djokovic was trailing in the match as he lost the opening set and he retired hurt soon after this. Djokovic quit because of a torn muscle in his left leg. Okay, with that, we are absolutely out of time on this edition of Business Lunch on CNBC-TV18, leaving with the markets actually slipping on the red side, Nifty below the 23,200 mark. But don't go anywhere, Mid-Cap Radar will take the action forward.